What up, what up, what up? It's Cool and Black here, and this video is going to be called The Process. It's called The Process because I recorded a video of me trading live the other day. It was a pretty nice setup. I was in the mood, so I just made a recording. And it's pretty much giving you guys a whole breakdown of like seeing me switch time frames, jump from time frame to time frame to see like how things are being correlated. Certain patterns that actually expecting the market to actually respect, all that stuff. So I mean, like, you're getting like a full breakdown of me in the process of a trade. Okay, entry down to the exit point. Actually, I missed the exit point because the video had got messed up. But as you can see here, this right here is the outcome of the entire trade. But I have the video of me actually, getting in on an entry, which was based off of a sell limit order, which is a pending order. Mainly because I caught it at like a real highest point that market was trying to wick out to, but it was not trying to close that. So I mean, it was still valid, and I took the entry based off of the 5-minute chart on this setup right here. So overall, top-down analysis first, guys. So overall, you already know that it was on a downtrend for this entire move right here. The red EMA was over the blue EMA, which showed a lot of bearish movement for this setup right here. Okay, beyond there, on the daily time frame, I seen a level of support, which was a monthly key level that was respected, which was that bullish candle. So I mean, me seeing that, and also me seeing on the lower time frames, such as this right here was a downtrend based off the H1. H1 also broke structure somewhere over here. This right here was the break structure on H1, and H4 had broke structure right here. Okay, so I correlated both of those, and seeing that and seeing a double bottom pattern on H4 also. So like, it was like a valid confirmation that the market was trying to trend up, but at the same time it hit a level of consolidation within this whole entire range right here. So how this trade had got set up was, I seen a level of resistance that the market wasn't respecting along this area. Let's find a median. So the market was testing that entire area for this move right here, which was the consolidation zone, and this range was around. It was a total of a 35 pip range. You could say a 35 pip range, which means that the market was consolidating within 35 pips for this entire move right here. So the main reason why I caught this sell was because if you went on higher time frames, actually like the weekly showed a bearish candle. So it showed that there was a lot of bearish movement still inside that market right there for this past week. So I knew that the market was not ready to actually take off yet, because to actually even make it take off, you would have to have a lot of bullish candles and everything along this area. So like, the market could have retraced, but slowly by slowly, it's breaking structure on low time frames such as the H4 and H1, which means it's slowly transitioning to more of a bullish market for this entire area. So what I did was, I was on the M5 time frame. Actually, I think first to 15. Okay, and I was looking at the structure that it was forming, which means that like all right here was the level that it was respecting on a higher time frame. And me seeing these big ass bearish candles right here showed me that there was a lot of bearish movement still. So the market could have continued that consolidation zone that was currently in for this point. Okay. So the area that I had took this trade off of, it was based off of me seeing this right here was a high. This right here was a lower high. And this right here was that lower low point that it actually made. So when I did that, I put my fibs, which is already drawn actually. Let me redraw it, so you guys see why I drew it. Fibs, the highest point, which is the lower high point, bearish candle, all the way down to where the market found the support area, which was at the bottom of that bearish candle. Okay, so this right here was the highest point that the market had to break to even continue the uptrend that it was pretty much trying to go. But since it's maintaining a consolidation zone, you're seeing lower high points inside this area right here. So me seeing that, and then me seeing bearish bearish patterns on the weekly and like the daily and so on and so on, I knew that there was still a lot of bearish movement within this setup right here. So the setup right here was based off of me getting in at a retest area, which was based off of a moving average point, which I'm going to show you guys in a little bit. But overall, it maintained the downtrend for this time frame right here, which correlated with the higher time frames, such as the 30-minute. You're seeing a lot of bearish candles. This whole entire area right here was still being respected. The hour chart was still respecting this entire area also. As you can see, tested, and the main thing that I had waited for, I remember waiting for it, was this candle right here. These two candles right here, which was a bearish engulfing pattern, which showed that there was still a lot of bearish movement within that entire area. So I never expected it to actually close past this open of this bearish candle, because the market and everything closed on a 4-hour bearish engulfing, which means that anything that happens over here is technically like a retracement, which also maintains structure for this trend right here. So my order itself, like, literally had like 0 drawdown, and beyond there, it was based off of a sell limit order based off the 5-minute time frame. And yeah, the trade itself, it took around, I'll tell you right now, it did hit TP perfectly also. Yeah, so it took like around 3 hours or so for this entire trade. It was a 5-lot order, 30 pips, like around $1,200 or $1,300, mainly because the maximum profit was all the way down here. But I made it retrace a tad bit because it came so close to my fucking TP, and I got out like when it actually started to retrace a little bit, and then it shot down again. So overall, I closed a little under where it TP'd, but overall, like, it did TP still. It did pass the area of the TP, and you guys are going to see everything in motion like right now also. So while it's actually playing, I'm going to be speaking as like what I'm looking for based off the time frames that I'm flipping through. And I did actually fast forward the video just a little bit, ×2, just so it's not literally in real time, because it'll take a long ass fucking time, honestly. So what we're gonna do is watch me actually waiting for the setup to actually get hit, to actually open the order, and me actually maintaining the order on different time frames between TradingView and MT4. My account numbers and everything is blocked out, obviously, along with my balance and everything, but don't be nosy, you know what I'm saying? Just take it for what it is. Okay, so let's go. All right, so let's press play. All right, so this right here is the 5-minute time frame that I was currently on. My sell limit order was based off right here, mainly because I seen the red MA still there, which meant to me that market was trying to actually test that area in the future, mainly because it didn't really fully like cross over and actually go on the downtrend, because on the M15 chart, it was still in a bullish type of SMA and EMA. So I did feel as if like the market had more time to actually retrace to that area, which it did. That's why I put my sell limit right at that red EMA. So it was respecting the M5 structure this entire time that it was on this trend right here. So right now I'm going based off of the M5 structure once I actually confirm that that H4 bearish engulfing pattern has already formed and so on. So I'm looking for, like a slight downtrend on these lower time frames, which helps me correlate the higher time frame setup as well. So as you can see, it's kind of slow, but let's fast forward a bit. And this right here is like definitely like the waiting game that I'm talking about, because you never ever know like how fast the market is going to always move. And as you can see, like I'm flipping from time frame to time frame to see like what's going on. It's respecting H1 perfectly. M5, I'm still waiting for M30. Let me see if I go on M30. Don't remember. Yeah, definitely the waiting game. The blue EMA is still being respected a bit, but as you can see how these two candles are forming, this bullish candle and bearish candle. This bullish candle is not being engulfed, which means that the market still has some bullish move inside there to actually still push up and get higher in the PRZ levels for that retracement that the market was currently in on this 5-minute move right here. So this is what I'm talking about, the patience thing. You can't be scared. You got to trust your analysis. You know what I'm saying? Trust your analysis. Know exactly why you're doing things inside the market, like when it's happening. So like when all this is happening, I'm analyzing, you know, in real time. Like I'm flipping back and forth, back and forth, back and forth. I'm not staying on one time frame the whole entire freaking time, unless I'm trying to like really watch my freaking order. But you'll see me like start flipping from time frame to time frame more as when the order gets hit. I started to flip to the other time frames just to make sure that everything is being correlated still and the moving averages are being crossed. So up here is the maximum retrace for this move right here, but me seeing the bearish candles on the higher time frame, I should already know that there's enough bearish movement to actually push this market down, even though it's counter trending up just a tad bit. So it's trying to maintain the downtrend based off the higher time frame itself. So me actually going here, actually went to H1 just to make sure everything was being respected for that area that it was currently in. So let me see if I can actually. All right, so right here, let me see, right. All right, let's go red. I'm 30. All right, H1. So right here, when I was on H1, I was looking for the market to actually respect this area. As you can see, the time also, the time is 11:50, which means that it's only 10 minutes left inside this bearish candle right here, this bearish candle. So like I was hoping that it didn't actually friggin', you know, push up and close beyond that area, which is like this bullish candle right here. Like if it closed beyond that area within the next 10 minutes, then it would have fucked me. But me seeing that it's a downtrend on the M5 time frame, that is enough bearish movement to actually keep on pushing us down and maintain that level of resistance that it was currently at. So I had 10 minutes for this hour candle to close. So like I'm really paying attention to this hour chart right now, just to make sure that that hour candle does not actually break over that previous point of resistance. So I'm on the hour, back to M5 because that's where my orders are going to be based off of. And as you can see, like my sell limit is literally right there. The red EMA, the red SMA is actually coming closer and closer and closer to where the current price is. But everything is still good for a nice push up still because this bullish candle is not being engulfed yet. Let's fast forward a bit. All right, so right now it's 11:52. This candle right here still has another couple minutes inside of it. Now it's 11:53, 2 more minutes left. Back to H1 just to make sure things are being maintained. And as you can see, like it's slowly spiking up. And all I need, like, if you have an ECN account, like ECN accounts, you don't need that much room to actually make the actual order get activated because ECN has very, very low spread. And all the market has to do is pass my sell limit by 0.6 pips to actually open this sell limit order right here. Compared to like a variable spread account, you have to open it by like 1 pip or 1.4 pips. So on an ECN account, it's very, very tight. So the market doesn't have to move too much over my order to activate it, which is cool because it could be activated by just a simple spike. Or a quick spike, not a simple spike, but quick spike. Here on the 15-minute time frame, you can see that there's a lot of bearish movement right here, bearish engulfing pattern, and this bearish engulfing pattern was not being broken beyond this point right here. And then right here also is a bearish variation. Also, you guys should know that, along with the M5 chart is still being respected for the trend that it's currently in as well. So we're 4 minutes in right now. A new 5-minute candle just opened. So let's wait and see how this plays out. All right, so we're back. 5-minute. So the 5-minute is picking up in its movement, and that bullish candle right there is getting close to that red EMA because that's the actual maximum area that I was expecting the market to actually retrace to at minimum. Don't mind that. And it's getting closer and closer and closer. Like the impatient person is gonna be like, yo, let me just put my sell limit closer, but trust your analysis. You know what I'm saying? Like, don't move your analysis. Once you actually put your sell limits, make it stick there. But remember, everything's based off the 5-minute time frame, so I'm just waiting for the market to actually retest this red MA and everything based off the 5-minute time frame. No other time frame right now because that's the area that I'm willing to actually make it retrace to and maintain the structure that is currently in based off this time frame right here. So as you can see, the order got hit. The order's open, a 5-lot order, and now we're taking it down instantly in profit. Pretty much, we didn't see drawdown because all I paid for was pretty much the commission, honestly. So that's hit. It's about to turn 12 p.m. in 1 minute, which means that this hour candle is about to close in a bearish engulfing pattern, which means that there's a lot of sellers inside that market to actually push the market down just a tad bit also. So now we're looking good. So that's how that L came about. Yep, so a bearish engulfing pattern closed on the 1-hour chart, which is fucking perfect. This right here is the level of consolidation that you're looking for this entire range that the market was currently in right here. Give me 1 second. So the wick back out. We're still looking good. M15 chart is still looking nice. The M15 got 14 minutes left. The 5-minute got 4 minutes left, and we have another 59 minutes of our candle. So now we're $64 in profit, just up 2.1 pips. Nothing crazy, honestly. Remember, this is a 5-lot order, so don't look at the money too much. We're looking at the pips, okay? Remember, this order right here did actually hit TP fully overall, but I mean, I did close over 20 pips. I think it was 21 pips actually for this order. I think 21 or something like that. But it was over $1,000 though. Actually, let me check right now. Yeah, this order closed at $1,132.74. Exit was $235, and my TP was $174, which is pretty close. So once again, I'm back on the H1 chart just to make sure that things are going good. After seeing that bearish engulfing pattern form, there's some bearish movement there still, and along with seeing bearish engulfing, that bearish candle on the H1, I mean the weekly time frame, there's still enough bearish movement to actually push this market and maintain the consolidation range for the bearish movement that was in. But you seeing the H1 chart broken structure, H4 chart broken structure as well, you should already know that the overall trend looks pretty bullish for the way that it's in like right now. But for the market status that it's currently in right now, you're looking for like a nice bearish continuation to actually maintain that consolidation zone up until the market is ready to actually push up, because it has enough bearish movement in other time frames to actually push this market down enough just to hit that TP area. So once again, like while you're actually in a trade, you have to be analyzing also. You know what I'm saying? Actively analyzing just to see how everything's going. It's sped up, so it looks raw as shit, I can't lie, but it's a little sped up though. So me just actually, you know, marking off where my engulfings are. So you're supposed to have reasoning for every single thing that you're doing, okay? So like as you're you're trading, you're actively analyzing also. All right, I'm back on this. I'm down 0.06 pips, which is pretty much spread. So you're just actually analyzing and waiting. These kind of things can be quite annoying. So yeah, this whole entire area is still being respected. Why didn't I place a stop loss yet? Because of this. I don't know how far the market is going to retrace before it actually makes like a nice solid level of resistance. So I'm waiting just a little bit more, and that's when I actually place the order the stop loss right above the 5 minute. Remember, because like since I base my entry off the 5 minute chart, my stops can be a lot tighter also. So I waited onto the market, found a level of resistance first to actually place my stops above the previous high, which is right here, above the previous lower high point on this short-term downtrend. Okay? So overall, like, if you look at how this was, the ratio, the reward to risk ratio was freaking ridiculous. So I mean, it's pretty dope. I think it's like a 1-to-5 or something, or a 5-to-1. That's freaking sweet, especially on a 5-lot order. Your minimum risk, maximum reward, which is how you should be trading. And when you actually get like some bomb ass entries like this, like you can maximize your profits and everything without risking too much on your account, which is dope. You know what I'm saying? So that's the kind of setups and everything that you should be looking for when you're trading actively, okay? And when I mean trading actively, I literally means like you're actually on the chart, actively analyzing, actively, watching your order move and fluctuate. So pattern after pattern, you're waiting for it. There's times when I'm on the charts for a couple hours, just analyzing, just making sure that things are being maintained and going to be in my favor the entire time. Okay, so I'm just sitting around waiting just so I make sure that the market, upgrade, like brings up its volatility. Because I know that since I'm in a consolidation zone, it can be pretty slow right now, but me knowing that the market at the end of the day, like it's on a lot of bearish movement based off the weekly time frame, you're going to be seeing bearish movement, but it's not going to be as soon as you expect, okay? So you always got to be patient in that sense because you never ever know when the momentum is going to pick up. So you got to stick around, wait for the market to actually, decrease its noise that it's making right now. Like all right here is noise. It's pure noise. Not a lot of people can actually read this right here, but once you get good enough at analyzing, you should already know like what's noise and what's the real movements of the entire market. So all this right here is a short-term downtrend on the 5-minute time frame, but it's correlating with the higher time frames bearish candles, which at the end of the day, like all this put together is pretty much building that higher time frames bearish candle. So the market started to make a level of resistance to some extent, and after that we started seeing some bearish movements on these higher time frames and these lower time frames, which is good. On the hour chart, I'm not sure what time is it here, but the hour chart had 43 minutes left, and you're still seeing lower high points once again, which is good. Remember, all right, so like right here, I'm only up 7.9 pips, $324. Some people would get like very impatient and just close out because they see the money portion, but pip wise, you're not up a lot. You know what I'm saying? Like risk to reward. If you exited right now, that would be terrible because that would be equivalent to a 1-on-1. As far as my stop loss area is equivalent to this same amount of pips because like my stop loss is so freaking close. I'm not risking a lot. So if I was supposed to actually hit my stop loss, I would only lose like around $324 or so. So like right now, it's a 1-on-1 trade, which is the minimum that you should be trading. But I hate doing those. Like if I'm trading, I want to do like a 1-to-5 or a 5-to-1 or a 10-to-1. You know what I'm saying? Like those high reward, minimum risk trades. With a nice lot size, so I'm not getting greedy as far as with money because I'm making enough money out of this trade right here to actually make me satisfied with what I'm getting out of the market for this area of what the market is in right now. So since I know that I'm on a short-term downtrend, I'm taking forward what the market is going to give me. You know what I'm saying? Like, I'm not going to be expecting to get like 80 pips out of this move right here, because the consolidation zone is only 30 pips. You know what I'm saying? So if the consolidation is only 30 pips, like, you shouldn't be trying to risk or trying to gain 50 pips or 80 pips out of this entire order right here. So I'm only going based off like what the market is showing me. Okay? Don't be greedy. This right here is only 8.4 pips in profit. It's not much. You know what I'm saying? Compared to what the full potential of this move was right here. So stop loss is pretty tight, you know, but we had full confirmation on lower time frames to put the stop loss at the area that's at right now. Real tight. H1 charts, 15 minutes in, 8.8 pips, $364. Started to pull back on the H1 time frame. This H1 time frame had 40 minutes left inside of it. Now I'm back to 7 pips. Back to 4 pips, 171. So as you can see, the money moves real quick. This is a 5-lot order, so it's very, very different compared to a standard lot and, you know, like a micro lot. You know, like any those lower lot sizes, a 5-lot moves very different. You know what I'm saying? So like, you have to get used to these lot sizes. You know what I'm saying? As far as like mental wise, like not everybody can actually just put a big lot size and be ready for it, because you have to be used to how a 5-lot fluctuates, used to how a 10-lot fluctuates. You know, like it took me a while and everything to get used to how a standard lot fluctuates, because, you know, there was a point in time that I was doing micro lots. But you have to get, you know, your mental stability on point to be doing these kind of lot sizes, because a lot of people look at the money, you know what I'm saying? But in reality, like, look at the pips and then look at the money, because it's going to kind of freak you out if you're just staring at the money the entire time, because these numbers move very, very fucking fast. It could be negative $1,000 in just 20 pips. You know what I'm saying? So 20 pips is not that much compared to, you know, a person or everything getting, let's say 80 pip drawdown and so on. Like, I know people like that. So 20 pips is not that much, knowing that UJ and everything needs time to actually fluctuate and, you know, time to breathe, because UJ itself, it's very spiky. Just like GJ. GJ is very, very spiky. So you have to always be open to the market actually fluctuating just a tad bit, and you need the market to breathe before it actually goes in your favor. If you analyze correctly, it will go in your favor if you analyze right. But you always have to give it time. You know what I'm saying? Like, never ever be in a rush for the market to go in your favor, because if you do, then, you know, you can get faked out or close prematurely. It's gonna be all kind of shit, you know. So this right here was the ending result of this order right here. It did actually go all the way down to the TP area, which is all the way down here, which was the max TP was 31 pips for this entire move. Stop loss was real tight, 8.4 pips stop loss. So overall, risk to reward was freaking amazing, and, you know, it's trust shit. On the higher time frames, like the weekly time frame, I seen this bearish candle right here, which told me that there was enough bearish movement right inside that market to actually keep on pushing down just a tad bit. But then again, me seeing all the structure change on these higher time frames, like the H4, H1, you know, you're seeing a change in the overall structure, seeing that even on the higher time frame, like the daily chart, you're respecting a monthly key level, which is major. You know what I'm saying? So like, once you see that, you know where the market found its major level of support at. Okay? Beyond that, you're just going on lower time frames to do, you know, top-down analysis and so on, to break it down to see like how you could take advantage of the market to get, you know, those 20, 30, or 40 pips, like whichever is your choice, honestly. But overall, like, all I need is 20 or 30 pips a day, and, you know, you can easily make $1,000 a day if you're putting the right lot size. So overall, this right here was, you know, the progress that I've actually, you know, been able to actually do and everything over time. But, you know, it doesn't come easy, you know, but you have to actually know how to actually, like, maintain your composure and everything under these stressful conditions of the market. Because when you start doing crazy, like, lot sizes, the numbers move fast. Never get scared because the pips are what really matter. Okay, so if you're going 20 or 30 pips a day, you can definitely be beyond profitable, especially with UJ. Just make sure that you're putting a good amount of lot size to make you satisfied with the amount of profit that you're making per order. Okay, so everything went good with this order right here. Entries, entries are very subjective at the end of the day, but that was my reason for actually putting my entry where it was. It was the easy selling order. It was just the highest point of a retrace based off of a wick that I expected market to actually get to, but everything worked out. Minimum risk, maximum reward, cashed out. So this right here is called the process. Okay, and I mean the process as far as the process of live trading, staying in the trade, maintaining the trade, doing all that shit just so you can actually cash out. So hope you guys enjoyed the video, and see you guys on the next video. Peace out.